Hello, fellow traders. 'Tis I, the Rumpled One. It is March the 14th, the year 2018. Happy Pi Day, 3.14. Let's talk trading. What, where, when? Why would I put what, where, when? Well, if you think about trading, it's what you trade, it's where you're trading it from, and it's when you trade. Because I always like to say, it's not what you trade, it's how you trade it. But there is what. I mean, what are you trading? You trading Forex pairs? Are you trading options, futures? So there is part of the what. That's something you decide. Where? Where do you trade? What do I mean by where? Where on the chart? Because, we're trading price. And so, where on the chart? Where, at what price level? That's the where. When? Well, when do you trade? Well, it's like what session or what time of day? That's part of the when. Or do you wait for when a particular setup appears, a particular level, when price reaches a particular level? So, the when and where and when, sometimes they're very closely related. So let's just take a look at the charts. But first, risk management, money and risk management, very important. And that's why you see this screen every day. It's simple, but it's something you don't want to forget about. Okay, we can see dollar Canadian. It inched towards here. It's still in that weekly wick zone. Such a big wick here. So in this particular case, where do you trade? Well, it might be the where is at the line. When price reaches the line. And as you can see here, we've only got one Australian pair that hasn't filled that weekly gap. And it's Wednesday, so we still have, about what, 2.5 days left or so. So we still might get that gap fill. So the gap is, when do you trade? You trade when the market opens on Sunday, Monday, depending on where you live in the world. And that's when you trade, and you trade right when that market opens because you want to see if you can get that gap, or you might wait a few minutes to see which way it's headed because you don't want it to, go the other way on you too far, but you want to definitely take advantage of that gap if there's a gap. And looking at the daily, well, where and when do you trade? Well, maybe if you like to trade a wick zone trade, but we'll do the wick zone later. But as you can see here, we've basically so far, this is an inside bar. It went into the wick zone and came out. Maybe you trade where? At the daily open. When price is near there, or with the buy zone. So we just mentioned the buy zone. And once again, you can see here, when do you trade? Where do you trade? Right here, right here. And you can see here, that one would have probably been a loser. This one may be a small winner. Okay, here we've got another small winner, a small winner. This one's probably a scratch. That one's probably a scratch or a loss. Here we've got a winner. Here we've got a winner. This one here, oh, maybe this was a scratch. This one a small winner. This one would be a winner. Winner, winner, chicken dinner, right? Looking at the rat zone, there's really right now, there's only 52 pips, and that was put in within the last 4 hours. So there's really not much of a rat zone trade here. So when do you trade? Well, probably when range is around at least 60. And when do you trade? When price is inside or just leaving one of the zones. See, for the rat zone, remember, any short up here between here and here, that's a valid entry as a rat. And any entry between these two dots here is a valid entry for a green rat. Red rat, green rat. So long, short. Okay, here we go. We're looking, almost hit that pivot. There's your open. There's the pivot. So once again, you want to trade from the open to the pivot. And as you can see, you had some opportunities to have some winners there. On the price action, where and when? Well, maybe you say, I'm going to trade with the H1 candle color when it hits the line. Or maybe you say, I'm only going to trade the turn trade. So in this position, we had a turn trade, green to red, and hit the line. Or actually, here you had a turn trade, red to green. So here, if you went long, you had, let's see, 10, 20 pips or better. But the candle closed red, so hopefully you took your profit. Otherwise, you'd be in drawdown. So once again, where, when? We know what we're trading. What we're going to trade dollar Canadian this month. So answering those questions, it's really simple, but you need to answer them pretty much ahead of time. That's part of your plan. And like when, because I think I already talked about when exit. Somebody asked me, when do I exit? And somebody else also asked, they asked me why I haven't automated these. And I guess they're new because that's one of those frequently asked questions. And the simple rule of thumb is, well, in a way I have, I've got all these indicators that tell me what to do. So in a sense, I have automated that, but why haven't I actually automated it via an EA to buy and sell? Well, I've written some, but for personal use only. It's because there's so many things that can go wrong. If you want to do automated trading, because see, automated doesn't mean unattended. Because if you leave your computer on, walk away, and something goes wrong, you could come back to owing your house, depending on, the position size you put on. So no, there's just too many things that can go wrong. I back in my TradeStation days when I wrote Otto Avery and the Otto Avery Portfolio Manager, yeah, it worked well, but I was living in the city where I had a high-speed internet connection. I also had a backup connection. I had 5 computers online. I had 3 different brokers online. So there was so many things I had backup redundancy, but I still had to watch. I had to be there every morning because if something went wrong, I needed to be able to pull the plug. So and keep things from getting worse. And one of the things when I moved to MT4, when I started trading, after trading Forex for a while and getting kicked off a TradeStation, I guess what turned me off to EAs was the whole idea of a magic number. It's just like there's no magic. And even though now I understand what they shouldn't have named it magic number. They should have named it something like EA number or transaction number or something. Because that, like I said, that just put me off. But anyway, I hope I have answered the question why I don't automate. Like I said, even if I do have automation, I wouldn't release it to the public because there's just too much that can go wrong. And even in TradeStation, I only released one thing, but it was for educational purposes only. Okay, here we go. Yesterday's 5 lines. Where do we trade? When we trade at the line when price is there. And as you can see here, trading at the line with the candle color, as always, can be profitable. And you can see here right now, we've got such a small range, what, 52 pip range on the day, really tiny. And looking at the wick zone, once again, price doesn't like staying in the wick zone. So where and when do we trade? Well, we trade when price is, price gets in the wick zone. We look to trade when price is exiting the wick zone. Now, there's one thing you can do on the wick zone. This is the daily wick. You can drill down and you can look at the hourly wick. So right here, you see price was leaving the hourly wick here. So right here at this level, you could have done a wick zone trade in H1 wick zone inside the D1 wick zone, or an hourly wick zone trade inside the daily wick zone trade, and you could have gotten a few pip jump. And right here, you can see the same thing. So that's just something else to be aware of. Especially, look what happened. It put in a slightly higher high, but then came right back down. Boom, you get in there. And I did another John Madden thing. Boom, you get in there, and there you go. And so you can see here, same thing happened. Put in a higher high, but then it came back down, crossed into this wick zone. You take the daily, and now it becomes an hourly. And see, once again here, the same thing. Once again here, the same thing. You see this pattern repeating itself? That's what you want to do. You want to find something that repeats itself and exploit it for profit. And you look at the holo zone. Once again, here we've got the H1 holo setup, right? And inside it, you've got M15. Here is the what? There's the highest M15 open. Price made a lower high, came back through. Once you could have jumped the gun here, because this was the main trigger, but right here, there's something that's telling you, wait a minute, if I get in here, you can actually get you had a what? You had an 11, 12, almost 12 pip jump on the gun. See how that paid off? I guess that's wick zone, holo zone, 400 level class, advanced. And here we go once again showing the tick chart with time and sales. And I was getting in a conversation with a guy on one of the forums, which I can't even remember which one it was, and he was telling me that you trade in the chart, and I'm saying no, you know the map is not the territory. I've gotten into that discussion so many times, but basically, they were trading time and sales long before they had charts. It's just that simple. Yeah, they had Japanese candlesticks, but back then, I don't think, when they had Japanese candlesticks, I don't think they had time and sales. So anyway, enough on that. And then this basically here is just pretty much a blank chart looking at the spread dots indicator right here. That's the peak right here. That's the valley. Okay, so when the ask gets below the peak, in other words, the highest bid, that's when you have what's called selling. Okay, right now we have buying going on. Why? Because the bid is above the valley. So in other words, bid price came up through the valley. And I think I detailed that before. And as always, fellow traders, I hope that helps. And if you have any questions, please ask. And just remember, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.